Hey, everybody, welcome to the live stream. If you're like me, you probably enjoyed a couple of NFL games today. There's been some good games, and it looks like the NFL is winding down the season, getting ready to set up the playoffs. And it should be a really interesting playoff run. I don't think there's a dominant team out there. We don't even know who the number one seeds are going to be just yet. It's all going to be determined next weekend, and we'll see who that is. So this live stream, we are going to do some learning. We're going to do some stock analysis, take a look at some stocks, see if they're good companies, see if they're priced at a discount or at a premium, and just really do the research that's involved in stock investing. And in addition to that, I wanted to go over a couple of stocks that I had in mind, go over a contest that I've got going for the channel. It is open to everyone. You don't have to be a member. You don't have to be a subscriber. You could just be whomever. Just get me your details. Make a stock pick, and we'll see if you come in. If you guess the right stock that's going to perform best next year based on the percentage gain of that stock next year. And we've already got a lot of people participating. I'll show you the list in a few minutes. We are nearing the end of the year, and we have 3 trading days coming up this next week. Monday, Tuesday, Wednesday. We will have full days of trading, even though Wednesday is New Year's Eve. Doesn't matter. We're still going to have some trading going on. So that is going to happen. And volumes haven't really been that high. Last week, volumes were low, and I'm looking at the heat map for the 1 week. It looks like NVIDIA had a good week. They had some news that they're acquiring a business that's going to give them some new designs to do chips that are really focused on inferencing. In the AI build out, companies or data centers have been focused on building large language models and using accelerated computing, these GPUs, to build it as fast as possible. And they've done so. But the next phase of AI is inference. And for inference, different chipset might be a better option. And NVIDIA acquired a company or acquired the assets of that company that's going to enable it to have an inference chipset. So market really like that. Micron has been on a tear. It's been a pretty volatile stock, but in general, it's been a winner. Just about most semiconductors have been doing quite well for the last couple of weeks. Looking at the software space, it had a couple winners over the last week. Google had a good week. Financials had a good week. Very good week. A lot of green out here. Amazon had a good week. Home Depot, Lowe's. Industrials looks pretty green. Pretty green for the aerospace and defense companies, specialty machinery, utility companies, real estate, a lot of green out there. So we are in the midst of the Santa Claus rally, where we tend to rally at the end of the year 75% of the time. So most of the time. And we've got 3 days to go. We'll see if Santa Claus just keeps it coming. Even healthcare, some stocks caught a nice little bid. So looks pretty good. Let's take a look at the month. The whole month of December isn't over, but this one here will show us, I guess, the very end of November and then December. NVIDIA made it through the month quite well, but Micron has really gone up almost 27%. And so have other semiconductor stocks. Some software stocks have gone up quite a bit over the last month. Looks good. And AppLovin went up a lot. Some aerospace and defense companies went up substantially. Financials look good. And healthcare did not have a good month. Neither did staples for the most part. Utilities had a crummy month. Real estate had a crummy month. So as we look at 2026, what is going to happen? which sector is going to do the best. Here's a 3 year. Of course, technology's just been working, right? Working overtime, making investors wealthy. Good. That's what they're supposed to do. Google, Meta doing great. Amazon. So just about this side of the heat map just been flourishing. And some of the heat map hasn't. Like energy, not doing all that great. You didn't want to be in too many staples during the last 3 years. But what's going to work next year? What's going to work in 2026? So that's the question that we should be asking ourselves. What are good sectors to consider? Is there going to be truly a rotation from the sectors that have been working into sectors that maybe hadn't been working? So I think there's a couple of good ideas. There are some stocks that look discounted, look pretty good. So we will let the market kind of tell us what's going on in January as the market trades. So that's what's going on with the market. Set this back to the 1 day. As mentioned, we have the Santa Claus rally going on. And one of the notes I was reading was that if we rally strong into the end of the year and we go over 20% for 2025, it'll be only the second time, I believe, ever that we've had 3 consecutive years of the S&P going up more than 20%, 3 consecutive years. So this will be the second time ever. So it doesn't happen all that often, which should make us all feel like, well, guess we're in an expensive market. There's no other way of putting it. Stocks have been doing great, but they've been doing really, really well. That compounding, if you look at from the beginning of 2023 until now, the S&P is up more than 80%. That's phenomenal. That's great. But that's just not normal. We shouldn't be having that good of a period, but we have it. If you're an individual investor, if you were invested, good job. Congratulations. And let's keep it going. Let's figure out how to make money in 2026. All right. So there wasn't any other big news out there. I think the crypto world is not doing much. I saw that Bitcoin was at $88,000 per coin. That's about where it's been for, I'm going to say, about a week. So let's take a look at this. Yeah, it's kind of been stabilizing around this price. I don't know what's going to make it rally, but we'll see. I think next year we're going to see a couple things happen. The most consequential secular theme that's going to be out there for 26 is, will the AI trade continue to work as well as it's worked, or will we have a pullback? That's going to be really interesting. We're expecting that people are going to receive bigger tax refunds in the spring because the government did higher deductions on paychecks than what was needed. The IRS didn't get the new rates out early enough, so employers had to go with the previous rates, which were too high. So the government's been taking deductions that are higher than what taxpayers were really going to need to pay. Having said that, so if people are going to be receiving a lot more money in the springtime, they're going to have more discretionary income, more disposable income. And that income, I think, is going to make it to retailers, consumer discretionary companies, services companies. Things like vacations are probably going to continue in 2026. So that's been going on. And of course, we have low interest rates. With low interest rates, I think more economic activity is going to happen. So things are setting up quite well for 2026, but I also expect we're going to have some volatility because it's an expensive market. If we have some credible stories, let's say the data center slows down, that's going to be a big one. That could cause a pretty good sell-off. So I'll be ready with some capital ready to go should that happen. And okay, so I wanted to go over a couple of stocks, starting with Okta. And if you're not familiar with Okta, and I'm going to go into Okta, but if you can pardon me, I got myself a tall glass of water and I left it in my kitchen. So I'm going to run to my kitchen and I'm going to run back just so I can take a sip of water. I'll be right back. All right. I'm back with water in hand. All right. So Okta is, you can say they're a security company. They do single sign on. And the stock this year hasn't performed all that great. And you can see that it had a pretty big sell off. The reason I want to look at it is the way it's been growing its business, the way it's been operating, I think is quite good. So let's take a closer look and see if maybe Okta is a good discounted stock. So it's a small cap, 15.7 billion. The forward PE for 2026 is going to be 25. That's kind of average. So let's take a look at what's the average PE? So the PE ratios for the S&P have been coming down. So the forward PE right now is between 23.38 and 23.54. And we saw that reading about, I don't know, 6-9 months ago. It would have been around 25, 26. So it's been going down because profits have been going up for companies. Companies are making more money than expected. Well, that's good by any kind of measure. That's very good. So these guys, you could say they're a little bit expensive, but let's see how they're growing to see if the higher PE is reasonable because they're growing. All right. So price target, according to analysts, this stock is discounted. The market's not liking it over the 5-year. Market doesn't like it over the 5-year either. The market's been a little bit tough on software businesses, and it may be the case here with Okta. These guys do the whole, sign in credentializing of users of a system. Big employers use Okta. So that's what they do in the scheme of things. So when we look at the trailing 12 months, their growth has been slowing. They had some years where, boy, they were really growing. They're not very big, but they're still growing, 12.12%. That is kind of a letdown. I think that's why the market's really selling this stock off. That slowing growth rate is a sign that they're losing momentum. And they're not that big. They have bigger competitors. They have competitors that are gigantic. For example, Microsoft has multi-factor authentication, and has, I believe, an equivalent software that could replace Okta, and that's Microsoft. They're gigantic. The most recent quarter, the growth was at 11.58. So it's not a terrible growth rate, but they got to get moving. The growth for a small business, they got to grow faster. Microsoft's growing more than 12%. They're gigantic. So these guys got to grow faster in order to attract investors. Their free cash flow has been growing. That looks good. Gross margins do look good, nice and high. They are now profitable. And their free cash flow margin is very good. 31.8 is very good. So they are not an impressive, like super impressive, like Palantir or AppLovin. They're growing top line real fast. They're real profitable, generate a lot of cash. These guys are growing, but not that fast. They're just slightly profitable. It looks like we're in this year here that they call fiscal year 2026. It's going to end January 31st in roughly a month. And next year is really this year that will begin February 1st and end the following January. Profits are going to expand. And from there, they're going to keep expanding. PE ratio is going to drop. So it looks like this is a good value stock. Now, the growth rate, if they hit this forecast, they're going to go from being a double-digit grower on the top line down to single digits, 9.1, 9.4, 9.6. Okay, so I could see why the market's selling this stock off. There's a slowing down of top-line revenue. And that is a concern with a smaller company. This is a small company in the scheme of things. Profits are okay. Cash flow is okay. But that top line, I always examine the top line because it tells me, are more customers coming to this company? Is their software so good that more customers are buying it, are becoming customers? And the product is so good that the company can raise prices. That's also growth. The company's offering new products and all existing customers buy those products. All those things are good organic growth. You're not seeing that with this business. You're seeing some decent growth, but not really incredible. So it's understandable that the market's been selling this one off. Let's take a peek at the balance sheet. I like to see that a business has its debt under control. And this one is completely in control of its debt because it has almost $2.5 billion of cash and only $423 million of debt. This balance sheet is very good quality balance sheet. Okay, so Okta's looking just kind of high level qualitative assessment. It's looking like sales growth is, let's leave it at questionable. It's showing signs of slowing down. And that's what I think the market's not liking and selling off the stock, because it's a smaller company. And if they can't grow, they may get replaced. You have to grow when you're little, or the big guys, the Googles, the Microsofts, they will have a product that's going to take you out. And they have big relationships with companies. So these guys have to start growing. The sell-off is understandable. Or I should say explainable. That's a better word, explainable. I have a valuation on Okta. Let's go through that. See if I want to change anything. So I have a 45% discount. How do I get there? Let's go step by step. And if there's something here that you don't quite understand, just put it in the chat. Ask questions in the chat. Glad to answer your questions. So first, I'm valuing the company based on the expectations of future cash flows. The number one way of valuing a business is measuring the cash flow that we expect out of that business. It's how Warren Buffett does it. That's how most of these very successful investors do it. That's how Wall Street would price a company that was for sale. So up here, I've put together a cash forecast that starts with the trailing 12 months free cash flow. Now, they are growing by about 12%, so that's why I used a 12% growth rate. I'm going to trim that back just a tiny bit, just to play it safe here. Discount rate of 7.5. Well, let me go over the cash forecast first, and then I'll talk about discount rate. So this is the forecast of the cash flow I expect the company is going to produce for the next 4 years. Then all cash flows beyond the fourth year is referred to as terminal value. Terminal value is all the cash flows that are going to come in after year 4 forever, because we operate with the assumption that these businesses are going to be around for a long time. I'm going to grow years 2, 3, 4 by 10%, and then long-term growth by 4%. And I think that's reasonable. When I ask, or I should say, a very typical finance calculation is net present value. That's what I'm doing in this field, intrinsic value. It's taking this discount rate and saying all that cash that stock investors would receive in the future, what's it worth today if we put a value to it? You discount it using a discount rate, which is 7.5 for a good business with a good balance sheet. I get to $31.5 billion. I'm going to add the cash on the balance sheet and take away debt. So overall, this business is worth $33.5 billion if we add up all the cash we expect we're going to receive in the future. We add the cash on the balance sheet. It's worth more than its current market cap. It's 53% higher. So this is a very good value stock. If they keep growing at 10%, at some point, this stock's going to work. It's going to go up in price because it's just a very good value. They have cash, net cash of $2 billion. That's about 13% of their market cap. Usually that's not the case. That's a lot of cash to be had. So maybe they can buy back some shares, especially at these depressed stock prices. That would help the stock price, by the way. All right, enough said about that. Now let's take a peek at the earnings per share valuation. So I just valued the company using the net present value of all cash flows I expect in the future. In addition, the net cash on the balance sheet. And I get a 53% discount. Now I'm going to value the company by looking at the profits of the company. The earnings, profit, earnings, same thing. And we get a nice earnings forecast from Stock Analysis. And I'm going to use the earnings forecast for the next full year. That's $3.78. P ratio of 25, that's fine. Growth rate of 10%. That's a little high. So I'm going to go with 8. So if I take the intrinsic value is the earnings per share. And here's the calculation. It's affected by the rate of growth and mostly by the PE that you assign to the stock. Why does Okta deserve a PE of 25? Well, there's some good desirable aspects of Okta. Starting with, it has a very high gross margin. High gross margin companies get a higher PE. It's also growing. Not growing as well as we'd like, but it is growing. So that's a good factor. It's producing free cash flow. It has a very good balance sheet. Those things enable the stock to receive a better PE ratio. For example, if we look at Palantir is going to receive a very high PE ratio. Why does the market give Palantir a forward PE of 203? Whew, that's expensive. And the reason for it is when you look at Palantir, you're going to see that it's growing really well. Revenue growth is excellent. You're going to see that it has very good profitability, 80% gross margins, 28% profit margin, 46% free cash flow margin. These numbers are awesome. Excellent numbers. So these numbers, along with the good balance sheet, enable, or I should say collectively, the stock market says Palantir is worth a P ratio of 200 because it's going to get bigger very fast with that high growth rate, has a lot of profit making ability, has high gross margins, high net profit margins, high free cash flow margins. All those things put together bring up that PE ratio. Okta is not quite a Palantir, so its PE ratio is 25. But kind of taking through the thought process of why does one company get a PE ratio of 12, 25, 50, 200? And that's the reason. So, all right. So Okta gets a 25 there. On earnings per share, there's not a big discount. If they can grow better, that would really help their case. And collectively has a 45% discount. Now, that's a fairly attractive situation to buy stock at a 45% discount. But the homework's not done. Okay, now that I know Okta is priced at a good discount, what other stocks within software are available? And what are the discounts available on those stocks? And then I can pick the best opportunity for my capital. So let's take a look at some other software companies. And the first one I'm going to look at is CrowdStrike. CrowdStrike's probably one of the more famous ones. And this one is priced more expensively. It's been a kind of a fan favorite. And if you recall, so let me just take you through these numbers. So CrowdStrike is a $118 billion market cap company. Okta was $15 billion. Wow, this one's 10 times more valuable from a market cap perspective. But when we look at cash flow, it's not that much higher than Okta. Okta had cash flows of just shy of $1 billion per year. These guys are doing just a little over $1 billion, $1.2 billion. But again, when you have a market cap that's 10 times higher than Okta, geez, your cash flow should be much higher. That said, when I do a cash forecast for CrowdStrike, I can't get to their valuation. I think CrowdStrike's too expensive. They also carry a higher PE. Even when I look at their earnings and use a higher PE of 36, I can't get to their stock price. So I think CrowdStrike's too expensive. Zscaler is priced a little too high right now. It's had a good year. Zscaler really rose nicely in part of 24 and most of 25. Fortinet, 37% discount. It has very good cash flow. Market cap's bigger. So Fortinet's discounted. Not quite as high as Okta. So that's out there. So Okta's looking fairly good. Palo Alto doesn't really have a discount. So I would think that Okta is a buy in my book. It's a good stock. Now, when is the right time to buy? Now, it's software stocks. I've been waiting for them to kind of begin to rise before I invest. For now, I'm going to say, it has a buy. I'm going to note that on my portfolio to see when I can possibly buy some shares. But I'm going to wait for the stock to begin to work. I don't want to get into it too early and then my capital just sits around. Who would want that, right? So let's take a look at the chart here. And this is let's take a look at the 3-year. So you can see that over the 3-year, this stock really rose in the latter parts of 2024 up to the middle of 25. And then they began to communicate that the growth of revenue wasn't going to be as good as they had first thought, and the stock really suffered. But it's had some pretty high stock prices, above $120 per share. Now it's had a little bump here. Let's take a look at the 1 month. Yeah, over the 1 month, it's done quite well. It's up. Is this right? 0.25. That's it. No, it's more like 20%. Let me jump back to this view here. So over the 1 month, it's up 9%. Year to date, up 12.45. 1 year, 6.5. So it's kind of been in a little bit of a rally. So that's good. So even though the stock has really been sold off, it has really, investors have begun to buy it. And the company should buy back shares with all that extra cash they have. If they buy back shares, it's going to really help the stock. So yeah, Okta's a buy. I'm going to totally make myself a note, see if maybe I can pick up some shares. All right, so that's Okta. So I see a lot of people are on. If you want me to go over a stock and you're a member, just put in the chat and I'll take a look at that stock. If you're not a member, no big deal. Just buy a $5 super chat or become a member. Then you can ask for stocks to be reviewed on live streams. And I live stream quite often. I'm live streaming today, tomorrow morning with Daryl, Tuesday evening, Wednesday morning with Daryl. Thursday's New Year's Day, so I'm probably not going to be streaming. But then Friday with Daryl in the morning. A lot of opportunities for you to put in stocks, and we can take a look at them and research them together. So take a look. All right, so as you may or may not know, I have a contest going on, and to see, just asking viewers, members, anybody who's, looking at my content, try to pick the stock that's going to go up by the highest percentage. And we've got about 50 people that have already made their stock picks and put down a stock that they think is going to perform the best in 2026 from a percentage standpoint. And we've got some interesting names. I thought we could kind of take a look at some of these and begin to get our heads around which stocks other investors that watch this channel or members of this channel are predicting are going to be good stocks. And whoever wins, there's going to be prizes along the way. The ultimate prize is picking a stock that at the end of 2026 is the best stock. That is kind of like it comes with the highest bragging rights, I guess. Hey, I picked XYZ stock and it went up 500% and it was the number one stock out of all the stocks that were picked. That could be a cool feeling. But each quarter, at the end of each quarter, so the first quarter is going to end March 30th, there's going to be prizes. One prize that's already on the table is Stock Analysis will give you a free subscription if you're the winner. If you pick the stock that goes up the highest percent for the first 3 months out of that year. And then the second quarter will have prizes, third quarter, and then the fourth quarter. And it'll be from start to finish of the quarter. So far, we have a long list of stocks that have been picked. Here they are sorted alphabetically, but I thought we can look at, this is 2025 performance. And some investors have picked some stocks that have done great, like ALM up 958%. Wow, incredible. And Nebius up 216%. Dave, a finance or new financials company, 164. Fubu, 110%. So there's been some good winners this year. And there's been some investors that are probably thinking, hey, those stocks have done great, but I think some of these stocks are going to come back, like the Trade Desk. Trade Desk is down 67% year to date for 2025. if they come back, this could be 100, 200% gainer for sure. Same thing with gambling. Gambling.com could really do well. The whole gambling space has been really undermined by the prediction markets companies like Polymarket and Kalshi. And MicroStrategy, or now it's called Strategy, that's really been sold off because Bitcoin's been under its previous high price. So they own a lot of Bitcoins and they actually have leverage against those Bitcoins. So it's become a riskier company. But if Bitcoin rallies, boy, Strategy is going to take off. So those are interesting stocks. Let's take a closer look, starting with the best performers. And Almonty Industries. These guys, Almonty Industries engages in mining, processing, and shipping of tungsten concentrate. The company explores for tin and tungsten deposits. It holds a portfolio of projects and mines located in Spain, Portugal, Republic of Korea. It's headquartered in Toronto, Canada. A lot of mining companies are headquartered up in Canada. Here's their website. So here's one of their mines. Interesting. Okay. So this mining stock in particular is a small cap, 2.47 billion. And that's after it's gone up 957%. Over the 5 year, it's gone up 1,157%. Wow, incredible. And for a while, it didn't do much. But more recently, I guess its materials got really valuable. And it went from like $1 a share up to $9.47 a share. So this one here, it could keep going higher. We'll see. What are any analysts? Two analysts are predicting or forecasting this business. In fact, more businesses are forecasting. The growth for this company looks really fantastic. It's going to really take off. Looks like their mines are becoming very productive and the growth is going to be there for this company. So good pick for the person who picked ALM. Very good looking stock. Good luck. Let's move on to the next company that looked pretty incredible on the list. That's Nebius. Nebius is up 210%. Over the 5 year, it's only up 29%. So it's been up, down, and up again, although it's had a more recent sell-off. Year to date, it had a high of $135 a share, but now it's down to $87 a share. So this one can definitely go higher, but it's going to depend on the story around the data center. Will companies keep investing in AI? If companies spend big on AI, then these guys are going to do well. So Nebius has had very good growth. They went from being a Bitcoin miner and now they're more into cloud infrastructure, providing GPU capacity to businesses that want to use it for AI purposes. And that growth is what's exciting investors and creating an environment for their stock to really go higher. So the growth looks good. Are they making money? Let's take a look. So they're burning a lot of cash, and recently, because they're putting a lot of money into the data center in the form of those expensive NVIDIA chips and other expensive equipment that goes in the data center. But they do have good gross margins. They don't have any operating margin just yet. They were profitable. They probably sold a lot of Bitcoin to create a profit. But you see that they're burning a lot of cash. So this business is really growing fast, but it's risky. But we'll see. We'll see what they do in 2026. Maybe they have another booming year and they do another 200% gains in 2026. We'll see. We'll follow it this year and see how well they do. Another business, this is Dave, which provides various financial products and services throughout financial services uh, with their financial services platform in the US. So they offer budgeting, personal financial management, and other tools. So their stock's really gone up, and it had its big move in the April to June timeframe, and then it's kind of gone sideways from there. So it's really consolidated for a period of time, and we'll see if it starts to move higher. Wow, look at that chart. It came into the market, it IPO'd, and then it really sold off. It was a $315 stock, and then it sold off to $5.69. Now it's up at above $200 per share. So talk about volatility, huh? So this one here most definitely can go higher. They have a PE that seems reasonable, 20.59. That doesn't seem too high. When we look at their growth, very good growth, 53% in the trailing 12 months. That looks really good. And their gross margins look good. Profits are there. Free cash flow is there. Hey, it's looking good. Looking really good. Very good growth. Very good profits. What are analysts saying? So, Dave, let's see here. 6 analysts are covering it, and they think it's discounted. 9 analysts are putting together a forecast on their revenue, and they're supposed to stop growing this fast after 2025. And in 2026, they're going to grow at 18%. 18% is good, but it's not as good as 56. I think that's why the stock's going sideways. It went up really fast with that high growth they were experiencing in 2025. And then after June, it's kind of gone sideways because investors now realize this is going to be a mid-teens revenue growth company. It's not going to be this hyper growth company. And their profits aren't going to expand much in 2026, going up only 1%. This one here I have discounted. It's just, this is what's a little bit concerning is this really going to go up anymore, or did it go up too high? Because it went up on this excellent growth. If they can start growing better than 18, let's say they grew at 25 or 30, this thing will rocket up. This one will really go up in stock price. We'll see if that happens. So that's a pretty good bet. That's a pretty good pick from whoever did that. Very good pick. I think that one can definitely make a lot of noise in 2026, maybe even win that contest. We'll see. Fubo is a company that's being acquired. Look at that. It was priced way up here at $48 a share. Now it's at $2.65. I think the acquisition was announced back here. It went from $1.25 up to $5.46. Now it's settled down to $2.65. Now the person who picked it probably thinks it's going to go back up to $5. And I hope it does. It'd probably be a good winner. And we'll see. We'll see if it does. Forward P is looking pretty expensive. This is not growing, but it's under an agreement to be acquired. So that's why the stock was moving up so much. It's not growing much on the trailing 12 months. Let's take a look at its gross margins and profitability. Gross margins are kind of low, 18.4. Profit margins are okay at 7.6, and then free cash flow at 8.5. That looks okay too. It doesn't look good. It doesn't look great either. All right, so analysts are saying it's going to end up higher because it's being acquired, 101% higher. That makes sense if they're agreeing to be acquired. And they see pretty good growth. Pretty good growth ahead. Look at this number up here. Whew. Maybe this is after they merge, but the growth in 26 is decent at 4.68. And then after that, they're going to grow even more. So that's a good pick. That's a good pick for the contest. For sure, if the merger happens, this one will go up 100%. So that's good. All right. So those are the winners. Or I should say, those are the stocks that had very good years for this year, 2025. Very good rates of appreciation. But let's take a peek at the companies that are having a terrible year, but can bounce back. That was the Trade Desk, Gambling, and Strategy. So the Trade Desk produces software, ad tech software. So if you're running ads, you probably use their software so you can run the best ads and get the best return on your marketing investment and get the most impressions, get the most leads, get more people to buy your product. And these guys are a small cap, 18.5 billion. The forward P is 19.46, which is reasonable. The stock's been under a lot of pressure this year. And this stock was working for a while. You see that coming out of 22, it went from $42 a share up to $140 a share. So it went like 250% higher. That was awesome. But then they stopped growing all that much. And I think they started seeing a lot of competition from AppLovin. And that really crushed the stock. Big fall. It rallied higher, big fall. So what's it going to do next? Well, it all depends on growth. So analysts think it's really discounted. And if they grow, this stock's going to work. Now they're going to have decent growth. This year they're growing at 19%, 16, 15, 15. That's pretty good growth. It's a smaller business, but that's still very good growth, good profitability, and they are going to grow their profits. So these numbers look pretty solid. The number one player in their space is AppLovin. AppLovin's had a phenomenal year. And if these guys can start growing Trade Desk a little faster, the stock could be a super winner this year. We'll see what happens. I like the pick. The pick's a good one. If these guys rebound, they can go right back to $100 a share. This thing's sitting at a nice 150% rate of appreciation. That would be very good performance. Let's see how it plays out. Gambling.com. These guys provide gambling sites. It's almost like a social application. It doesn't take any bets. It just does betting information like odds and information on like, hey, a game's coming up, and they give you background on the game or information that gamblers would use, but they don't take any bets. And the stock hasn't been doing all that great from really early 2025. It's really sold off. That's after rallying quite nicely. It's really become an affordable stock at $5.23. And this is a UK-based company, but it is listed in the NASDAQ. And this company is a tiny market cap, 184 million. Really low PE is 7.64. These guys are an acquisition target. They do quite well. If you look at their financials, they're growing nicely, 24%. Gross margins look great, 93. They had a less profitable year for the trailing 12 months, but previously the profitability was good and the free cash flow is very good. So there's some good numbers behind Gambling.com. The market's really selling it off. There's been a lot of pressure on the gambling, the kind of traditional gambling businesses like DraftKings, because the prediction market players are kind of taking a lot of that market share. But gambling doesn't participate in the gambling. They just provide data and information, and they do a lot of, I think, collaboration with gamblers, but they're not a gambling site. Nonetheless, I think they're being kind of put in the same pool as DraftKings and others. Now, their growth was really good this year, 32%. Next year, their growth is going to be 12.7. Not as great, but it's still growing. It's still profitable. It generates very good cash. So I think this is a really nice value play and most definitely a very good pick for this contest. We could be sitting here at the end of 2026, and this could be a $20 stock. And it would be a phenomenal rate of appreciation. So whoever picked gambling, good luck. It's a very good pick. And another company that struggled this year is Strategy. And these guys are all about Bitcoin. They borrowed money so they could buy more Bitcoin. They have a balance sheet with a lot of Bitcoin. And at times, this thing was really expensive, got up to $434 a share. But that's when Bitcoin was at $120,000, $124,000 per coin. It's now at $88,000 per coin. So that stock decline of Bitcoin really affected strategy. So if Bitcoin rallies in 2026, strategy is going to rally. It's a leveraged position. And if Bitcoin goes up, let's say 20%, strategy goes up even higher, like 40 or 50%, because you're basically using leverage. It's riskier, but the returns or the losses are exaggerated. If Bitcoin goes up, you're going to see strategy go up even higher. If Bitcoin goes down by 10%, strategy would go down by 20, 30%. So we'll see what Bitcoin does. If it goes up, strategy is going to look like a genius move. So whoever picked it, that's a very good pick. It makes sense. You got to aim for the fences to potentially be the winner of these contests. So that's what's going on with the contest. If you haven't gotten your pick in, it's easy to do. Just go on one of my posts. You can do it on this live stream. Just make sure I get it here. And you could say, hey, my username on YouTube is this, and my pick is that. Make sure you read the latest posting that I have, and don't pick something that's already been taken. So take a look, and you could do it. I've posted it on my YouTube channel, posted it on X. I posted it everywhere that you would see me, and it's easy for you to get involved. Hopefully you can play and then watch it throughout the year. So that's a contest that's going on. All right. So just real quick, you guys know I have a membership program, 4 different levels, and I have been creating a lot of content for especially the advanced investor level and super investors. So if you'd like to see more of my research real time, consider being a member. And whatever level you sign up for, even the least expensive one, when you go on live streams, you can request stocks to be reviewed, and that comes with every level. So take a look. It's on the home screen of my channel. All right. So we are almost an hour into the stream, and I haven't gotten one comment. I wonder why. Did I turn on comments or something wrong with the comments? I usually get a couple of comments by this point. No big deal. Maybe it's just a quiet weekend. It is the holidays where there's just not a lot of trading. And maybe this week people are just taking it off. But thanks for tuning in, everybody. Got like 24 attendees. I appreciate it very much. And check out my channel. I've got really good content that's come out. A lot of content's coming out here in early January. If you're a paid member, and especially advanced member, you get to see a lot of the videos when they come out. They also come out 30 days later for the general public. So when you see my videos, you may see that they're a little bit dated, and it's by design. If you'd like to see them when I publish research and content, you become a member, you get to see it real time. If you're not a member, you see it 30 days or 30 days plus after I produce it. So I figure that's an equitable way of rewarding the people who are members. They get to see the research first, and then everybody else sees it later. All right. So tomorrow morning, I'll be streaming with Daryl at 9 a.m. Eastern, 6 a.m. Pacific. And you know, Daryl, he does technical analysis. I do fundamental analysis. So if you'd like to check in tomorrow morning, it'd be great to have you. I will be able to go a little longer tomorrow, and we can watch the market trade for an hour and a half, 2 hours. So tune in if you'd like. We can take a look at where the stock market's trading tomorrow. All right, everybody. Well, let me wish you a good night. Thanks for tuning in, and I'll catch you on the next live stream. Happy holidays. Let me wish you a happy new year. Might be the only time I get to wish you a happy new year. But if you tune into other live streams, I'll do it again. All right, everybody. Have a good night. Thanks for tuning in.